It is 10:08 a.m. Pacific Daylight Time. It is the 6th day of May 2026, and this is episode 1315 of Bitcoin. And I completely forgot yesterday was Cinco de Mayo. This is an issue with me. I got to get it off my chest. I think Eastern Washington State is really pretty. The people are just people. They're really nice. But man, this place isn't home, right? The desert Southwest is home to me. And one of the reasons that I figured out why that is, why Eastern Washington can never be my home, is that I forgot it was Cinco de Mayo. You know, growing up in West Texas, the Latino community is fucking huge, and I love it. I love these guys. I love their culture. I love how it's not their culture. It's West Texas culture. It's my culture. I would have known 2 weeks before Cinco de Mayo was going to happen that Cinco de Mayo was going to happen. I could go to any grocery store in Lubbock, Texas. I'd be just riding around town in the car or something like that, and I would see signs that Cinco de Mayo was coming. And yesterday, I completely forgot it. I even said the words, hey, man, it's May the 5th, 2026, blah, 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 blah. And I had no conception that it was Cinco de Mayo. If I had been in Austin, Texas, or God forbid, San Antonio, Texas, there's a massive celebration down there. I would have known for weeks in advance that it was coming because it's part of the culture. And it's just one of those things that tells me I got to go home, man. I got to find my way. I got to find my way somehow or another back to the desert Southwest. Because I could be anywhere from Lubbock to Santa Fe to Durango, Colorado. And I guarantee you, I would have known all over the place that Cinco de Mayo was coming. But we've got other fish to fry. We've got riot platforms in the news. We've got, what else have we got going on today? Colombian president and Bitcoin mining is in the news. And of course, strategy. Yes, we're going to talk about strategy. I promise. I promise. Then the Kobisi letter, if you've not seen that on X, it's not bad. I actually rather like the Twitter account or the X account or whatever you want to call it. But the Kobisi letter is analyzing some shorts that were made on oil early this morning, and I want to go through that one. And North Korean terror victims are escalating the fight to seize the $71 million from the Aave hack. So this whole DeFi hack and the Gerstein Haro LLP lawyers, this thing is getting to be a mess really, really quick because it's escalated again. Second part of show, Kraken and MoneyGram together. Then Bitcoin Core patching a little problem that Bitcoin Core software had. And then what else are we going to do here? Oh, I don't want to do the Colombian president right there. Law enforcement has been able to freeze some $41 million that was connected to some crypto attack. And then yet another DeFi attack is going to round up the end of the show. But let's start with the whole strategy problem. And we're talking about Michael Saylor's strategy, formerly MicroStrategy. He dropped a bomb on everybody yesterday, and it's made a mess. Nobody really knows what the hell's going on anymore. Let me just start it off by reading you this from Danny Park, writing for The Block. Strategy likely to sell Bitcoin to cover STRC dividends, Michael Saylor says. Now, that's the headline. Strategy, the world's largest crypto treasury firm, may sell Bitcoin to fund dividends for its high-yield perpetual preferred stock, STRC. In its first quarter 2026 earnings call, Strategy executives highlighted the rapid success of STRC and the company's greater flexibility in managing its balance sheet, including the ability to pay dividends by selling Bitcoin while continuing to grow its overall Bitcoin holdings. Strategy Chairman Michael Saylor noted that the firm's current position requires Bitcoin to appreciate at 2.3% annually for its existing holdings to cover STRC dividend obligations indefinitely without selling any common stock. Quote, the BTC break-even ARR is also the inflection point where stretch issuance, that's the STRC, stretch issuance results in more Bitcoin being stacked by our company than the Bitcoin we use to pay dividends, if we choose to pay dividends with Bitcoin, Saylor said. Saylor explained that the firm can opt to stop selling the MSTR common stock immediately and fund dividends through Bitcoin sales. The approach would eventually help Strategy buy more Bitcoin than it sells to cover dividends for its STRC, which has raised $8.5 billion since launch. Holy crap. Later in the call, Saylor also commented, quote, we'll probably sell some Bitcoin to fund the dividend, just to inoculate the market, just to send the message that we did it. We're definitely coming back to that to analyze what that means. Meanwhile, the Strategy chairman had repeatedly maintained that his company would never sell its Bitcoin, making that message a core part of Strategy's brand as the ultimate corporate Bitcoin holder. The latest earnings call marked a departure from this long-held never-sell conviction, signaling now a willingness to selectively sell Bitcoin to support its STRC strategy. Quote, we will sell Bitcoin when it's advantageous to the company. We're not going to sit back and just say we'll never sell the Bitcoin, Strategy CEO Phong Le said during the call. Quote, we want to be net aggregators of Bitcoin, increasing our total Bitcoin, but more importantly, increasing our Bitcoin per share, end quote. The company currently holds 818,334 Bitcoin, approximately 3.9% of the total Bitcoin supply, roughly valued at $66.5 billion as of today. In the first quarter, Strategy acquired 89,599 Bitcoin and then purchased another 56,235 Bitcoin in the early part of the second quarter. In the first quarter, Strategy reported an operating loss of $14.5 billion, primarily driven by mark-to-market adjustments tied to Bitcoin's price movement during the quarter. The company posted a net loss of $12.5 billion. Bitcoin per share did increase to approximately 18% year over year to 213,371 Satoshis per share. Strategy executives said that the company aims to double Bitcoin per share within 7 years through its digital credit strategy led by STRC. The company's NASDAQ-listed MSTR common stock rose 1.7% on Tuesday to close at $186.90. It has gained 46% over just the past month, but still remains down 26.7% over the past 6 months. Okay, so that's the end of the article. Let's go back up to this piece that I got highlighted up here. Later in the call, Saylor commented, quote, we will probably sell some Bitcoin to fund the dividend, just to inoculate the market, just to send the message that we did it. Who does that sound like? Elon Musk. Because Elon Musk said the exact same thing, almost. I don't think he used the terminology inoculate the market, but there was some other language that he used that kind of points in that same sort of direction. And he definitely said he wanted to send the message that they did it. That was Elon Musk selling a whole bunch of Bitcoin after they got a whole bunch of Bitcoin, made a smoking ton of money off of it. And this was when I think Bitcoin hit $67,000 per coin, like 2021 or 2022, somewhere around there. And then he sold a big old chunk of Bitcoin, but he kind of used a lot of the same language that Saylor is using here. So what does this all mean? What happened to the never sell? Is Michael Saylor finding himself a bit over his skis when it comes to these essentially 6 products that he's got for sale? I think it's more like 5, because he's got 4 of these. I think he's got like 3 dividend Bitcoin exposure stocks like Stretch and Strike and Strife. Then he's got MSTR itself, the common stock. So, and then I guess he's got MSTR preferred stocks. So I think there's like maybe there is 6 vehicles. I guess you could say that there is actually 6 vehicles, because he's got 4. I think he's got like a non-interest bearing version of exposure to Bitcoin. And then he's got 3 that I like, Strife and Strike and Stretch and all that shit. And then he's got preferred and common MSTR stocks. So maybe there is 6 products. But is he over his skis? And what happened to the statement that we heard last year? Actually, I think it was midway last year, maybe at the end of the first quarter of last year, where he said, oh, no, we've got enough cash to cover all the dividends up until 2027. Is he talking about what happens? Is he talking about after 2027? That's when they start selling Bitcoin? I mean, you know, this is the kind of thing that shakes markets. And what I find amazing about it is the timing. We're just getting to the potential of seeing light at the end of the tunnel of this particular bear market. And here, all of a sudden, as if he doesn't know better, here comes Michael Saylor saying, well, we've readjusted our viewpoint here. Really? Now? You couldn't wait? Or you couldn't say that shit at the bottom of the bear so that we could make sure that we had a full-blown bear market? You had to wait until we see some form of recovery happening? I think I start to wonder. Maybe some of the people that think that Michael Saylor is a CIA plant, maybe they are correct. Maybe the tinfoil hatters were right all along, that he's really a plant to screw up Bitcoin in the long run, because the power structures that be just know that if they can't control it and it's competing with the US dollar, that it signifies a potential major loss of global control. I don't, at this point, I'm completely neutral on Saylor. We'll see, I guess, but we're not done with Saylor yet, because 21 Shares has listed Strategy-linked STRC ETN on the London Stock Exchange, expanding United Kingdom's footprint. Oh, the timing is just brilliant here. Also from the block, this one written by Brian Danga, 21 Shares has listed its Strategy-yield ETN, STRC is the ticker, on the London Stock Exchange, marking the first time UK investors can access Strategy Incorporated's perpetual preferred equity through a local exchange-traded wrapper. The STRC vehicle tracks Stretch, a variable rate Series A perpetual preferred stock issued by Strategy Incorporated and linked to its Bitcoin-focused reserve policy, the asset manager said in a statement. Strategy is the world's largest corporate Bitcoin holder, and then they go through those numbers again. We don't need them. 21 Shares framed the STRC ETN as a bridge between digital asset upside and traditional credit stability, noting that distributions have been paid consistently since the underlying stock's issuance. For investors, the STRC structure allows for high income potential within a standard brokerage account, bypassing the technical requirements for direct Bitcoin ownership, the asset manager added. Quote, the listing of the 21 Shares Strategy-yield ETN on the London Stock Exchange is a definitive moment for the UK market. We are introducing an easy-to-access investment product that combines high income potential with a familiar exchange-traded structure. By bringing this strategy to the LSE, the London Stock Exchange, we are giving UK investors an innovative tool to generate income that simply was not accessible in an ETN wrapper before, end quote. Strategy's Fong Li said STRC currently offers an 11.5% yield paid monthly in cash. He added that the ETN structure extends access to what he describes as a new capital model that has developed over the past several years. The LSE launch follows comments from Strategy Chairman Michael Saylor, who noted during the first quarter earnings call that the firm will probably sell Bitcoin in the future to cover STRC dividends. Saylor stated that the company might sell some holdings just to inoculate the market. We've gone through that already. So at the same time that Bitcoiners are seeing some light at the end of this particular bear tunnel, Saylor drops a bomb and changes the attitude of the never sell attitude that Strategies has basically been saying since the year 2020. That summer was when Strategy first launched. Everybody knew first launched their Bitcoin strategy. They started buying it. All of a sudden, people that had never heard of MicroStrategy before became very aware of not only MicroStrategy, but of who Michael Saylor was and blah, 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 blah. And all through that time, until yesterday evening during the earnings call, they have never wavered on the never sell your Bitcoin attitude. And then all of a sudden, it's now, well, maybe in the future, but just so we can somehow get more Bitcoin. And I get it. If they're able to cover the dividends by selling Bitcoin, then more people might be attracted to buying Stretch at 11.5% because the dividends do pay out. And then all of a sudden, they've got a fresh infusion of cash because they're printing this Stretch stuff, and then they use it to buy more Bitcoin. I could see how it could possibly work, as long as these people are not wanting to cash out the principal of their STRC preferred perpetuals. There's no way to know. I don't like it. I just don't like the fact that he went for 6 full years and a full quarter and a little bit past that saying never sell your Bitcoin. And all of a sudden now it's, well, we might sell some Bitcoin. Yeah. Conviction, integrity, these things matter. People take notice. Some people still take notice. Just saying. Okay, let's move on to oil. The Kobisi letter has this small analysis of what happened early this morning. According to our analysis, $920 million worth of crude oil short positions were taken just 70 minutes before an Axios report claimed the United States and Iran were near a 14-point deal to end the war. At 3:40 a.m. Eastern Time today, nearly 10,000 contracts worth of crude oil shorts were taken without any major news. This is equivalent to $920 million in notional value, an unusually large trade for 3:40 a.m. Eastern Time. Then, at 4:50 a.m. Eastern Time, just 70 minutes later, Axios reported that the U.S. is, quote, close to a memorandum of understanding to end the Iran war. By 7 a.m. Eastern Time, oil prices had fallen over 12%, with these crude oil shorts gaining approximately $125 million. Minutes later, Iran launched the, quote, Persian Gulf Strait Authority, and oil prices surged 8%. What just happened? Really? You're asking the question of what just happened? Insider trading is what happened. Nobody buys fucking 10,000 contracts of oil at 3:40 a.m. Eastern Time. Yes, I hear what you're saying. Yeah, people buy contracts. Yeah, 10,000? Really? You're going to do a $920 million deal, almost $1 billion at 3:40 a.m. Eastern, just because somebody gave you a phone call and said, you know what? Hey, I'm a billionaire. I think I want to take 10,000 contracts out on short positions. No, that's not how this works. I'm sorry, that's not how this works. Somebody knew something. Again, this is like the fifth time this shit has happened. Very, very well placed shorts or longs, depending on which way oil was going to go on whatever announcement on whatever day, taken minutes before, if not, an hour before to minutes before. One trade was done 15 minutes before an announcement that sent the price of oil plummeting. And of course, they were short positions because, this guy never loses. It's all bullshit. It's all and I love the people in the background going, "Oh, it's good. That's Trump." I don't know if it's Trump. I didn't say that. I don't give a shit if it's Trump or not. Somebody somewhere knew something, and they traded 10,000 contracts at 3:40 a.m. Eastern, and a little over an hour later, they were $125 million in the black on that trade. It's like they knew something. Just keep that shit in mind. Meanwhile, Riot Platforms goes nuclear. Riot stock explodes to a 4-year high after sealing a deal for molten salt AI power plants. This is out of Stockwits. Riot Platforms stock rallied to a fresh 4-year high on Wednesday after the company announced it had inked a new deal with Terrestrial Energy to co-locate molten salt nuclear reactors with hyperscale data centers. Simply put, they want to build data centers for artificial intelligence workflows, high-performance computing, and Bitcoin mining with small nuclear power plants located nearby to provide constant and reliable energy. What makes the deal special is the Terrestrial Energy's integral molten salt reactor, giving Riot an edge over other Bitcoin mining companies that are pivoting toward data center infrastructure. Riot stock gained 12% to hit $23.64, the highest the share price has been since March of 2022. IMSR's stock, I guess that's Terrestrial Energy, they gained over 15% in intraday trading and was also among the top trending tickers on Stockwits. Retail sentiment around the firm on Stockwits trended in bullish territory over the past day, also with high levels of chatter. According to the announcement, Terrestrial's energy technology is a newer, smaller type of nuclear reactor. And it's designed to be safer, more flexible, and easier to build than traditional reactors. Riot will handle building and operating the data centers. The company said the project targets up to 4 gigawatts of nuclear power from multiple 390 megawatt IMSR plants using standard assay low enriched uranium fuel. Natural gas may serve as a bridge fuel for faster operations and resilience. Both IMSR and Riot companies are exploring sites in Texas and Kentucky along with other locations. These projects are still in very early stages, and the first facilities may not be ready until the early 2030s. So let's keep a lid on how happy we are about nuclear energy coming to power Bitcoin and other items. Now, if you remember, Riot started out as a full-blown Bitcoin miner, and over the past few quarters, they've been pivoting into high-performance compute, data center, AI GPU-based stuff. It's like all the rest of these guys, but they've never left Bitcoin mining by itself. They still mine Bitcoin to this day. And the fact that they've put that in their company statement that they want to do this with AI, they want to do it with high performance compute and with Bitcoin mining is a good sign that they are not planning, at least anytime soon, to just not do any Bitcoin mining at all. Plus, if they've got that much energy, 4 gigawatts. Think about that. 4 gigawatts. Let's see, that'd be 16 small maybe 16, 17 small nuclear reactors, and able to provide them with 4 gigawatts of power. Dude, we might be wanting to take like a shorts out on oil and natural gas around the year 2030. So we'll see how that runs. Meanwhile, that whole salt thing, the salt nuclear reactors, makes me a little hungry. That's why I got sats4snacks.com. That's sats, the number 4, snacks.com. Go there, get yourself some freeze-dried pineapple, freeze-dried peaches, freeze-dried mangoes, freeze-dried strawberries, freeze-dried bananas. The bananas are freaking awesome, by the way. And he takes Bitcoin for it because it's the Circle P, yo. It's where I bring plebs just like you with goods and services to plebs just like you who want to buy said goods and services. You will be buying it in Bitcoin, because if you're not selling it in Bitcoin, you're not in the Circle P. Sats4snacks.com. That's sats4snacks.com. I've tried these. He sent me a pleb pack. And the pleb pack has strawberries, pineapples, peaches, mango, and bananas in it. And they're freeze-dried, not dehydrated. And that makes all the difference in the world to how much flavor is actually in the product. Freeze drying, damn, it's like it actually seems to intensify the flavor, while standard dehydration seems to make it muddy. And it doesn't matter. I've done freeze dried I've dehydrated all manner of fruits. It just, they never pop. The flavors never pop. But with freeze dried stuff, especially from sats4snacks.com, that flavor pops. So use the code Bitcoin and you will get a 2.1% off of your entire purchase at sats4snacks.com. Support your local plebs, man. Support your Bitcoiners. Support the local Bitcoin economy by using your Bitcoin to buy from plebs that produce things. They're in the Circle P. I bring them to you every day, Monday through Friday. So please, please, please consider going to sats4snacks.com and picking yourself up some tongue-popping fruit. North Korea terror victims escalate fight to seize $71 million from the Aave hack. Sam Reynolds is writing this one for CoinDesk. Lawyers seeking to seize $71 million in frozen ether for victims of North Korean terrorism changed their legal strategy Tuesday, arguing in a new court filing that the April 18th RS ETH exploit was not theft, but fraud, directly countering Aave's attempt to void a restraining order blocking the release of the assets. Let's pause there so we can get our collective shit together. When I first reported on this, I was basically saying, hey, these lawyers have come out and they're trying to make sure that Aave can't move this ETH. And then yesterday I came out and I said, and the news came out that Aave was, Aave had made a different argument against what this particular lawsuit was trying to do, trying to freeze the assets. But now Aave is the lawyers are trying to snap. They've come back with essentially this is their response, right? So in a 30-page opposition brief filed in the Southern District of New York, a lawyer representing the North Korean terror victims argues the exploit was not a smash and grab theft, but a fraudulent lending transaction, and that under longstanding U.S. law, fraudsters who acquire property through deception can obtain legal title to it, even if that ownership is later reversible. Yeah, I know. I'm going to read it to you again. Listen up. The exploit was not a smash and grab theft. It was a fraudulent lending transaction. And under long-standing U.S. law, fraudsters who acquire property through deception can obtain legal title to it, even if that ownership is later reversible. This is the new argument. Quote, what actually happened is that North Korea borrowed assets from users of the Aave protocol and did not pay it back. And when the Aave protocol sought to liquidate North Korea's collateral, the Aave protocol unhappily discovered that the collateral was worthless, the new filing reads. Quote, the law is crystal clear that a fraud victim passes title, not merely possession, to a fraudster. Charles Ponzi obtained, through his now eponymous scheme, defeasible title to his victims' cash, it continues. That's the statement that they're making here. The dispute traces to a cross-chain bridge exploit last month that drained $230 million from Aave, an attacker widely attributed to North Korea's Lazarus Group by forensic firm, including Chainalysis, minted unbacked RS-ETH tokens, used them as collateral on Aave's lending market, and borrowed real Ether against the worthless deposits. Developers tied to the Arbitrum blockchain later intercepted about 71 million before it could be cashed out. The filing escalates the dispute beyond New York property law, invoking the Terrorism Risk Insurance Act, a post-9/11 federal law that allows people who win court judgments against state sponsors of terrorism to collect these judgments from any U.S.-held property belonging to the country in question. If the court accepts that theory, Aave's earlier arguments about New York property law may matter less. The filing also asks whether Aave has legal standing to challenge the freeze at all, citing the company's own terms of service, which state that it does not have, quote, possession, custody, or control over user assets, a core aspect of decentralized finance. Lawyers also pointed out in the filing that the affected users may not need the frozen Ether at all. DeFi United, an industry-led recovery fund Aave itself is part of, has raised $327.9 million as of Tuesday morning, more than 4 times the disputed $71 million. A hearing is scheduled for Wednesday, May 6th. Okay, I want to go back and reread this sentence. The filing asks whether Aave has legal standing to challenge the freeze at all, citing the company's own terms of service, which state that it does not have possession, custody, or control over user assets, a core aspect of decentralized finance. And ladies and gentlemen, inside that sentence, the attack surface area for all decentralized finance has exploded. It's either tripled, possibly quadrupled, maybe even an entire order of magnitude of surface area just became available for attack. You'll need lawyers to do it, but that attack surface is now open on DeFi. Please, please, for the love of God, get your shit off of DeFi. Let's run the numbers. CNBC futures and commodities. All energy is in the red today by a lot. Brent North Sea is down 7.5 points to $101.57. West Texas Intermediate down 7% to 95 and a dime. Natural gas down 2.5 to $2.71 per thousand. Gasoline is down 4% to $3.47 a gallon. And Merbon crude is down 7.6% to 97.88. Metals walking the other direction. Palladium is up 2.6%. Gold is up 2.7%. Platinum is up 4.25%. Silver is up 5% to $77.36. Copper is up $3. Wow. Ag is almost all in the red today, except for chocolate, making another gain of almost 5%, being our winner. Our biggest loser today is coffee, 2 points to the downside. Live cattle is moving sideways. Lean hogs down 1.6%. Feeder cattle up 0.25%. S&P is up a row of sticks, 1.11%. NASDAQ is up 1.6%. Dow is up 1%. And the S&P Mini is up 1.6%. Meanwhile, Bitcoin chilling at $81,500. We almost got to $83,000 early this morning, but that, pressure release valve. That's still a $1.63 trillion market cap. And you can get 17.4 ounces of shiny metal rocks with your one Bitcoin, of which there are 20,025,379.28 of. Average fees per block, 0.02 Bitcoin taken in fees on a per block basis. There are 35 blocks carrying 60,000 transactions waiting to clear at high priority rates of 4 sats per VByte. Low priority is going to get you in at 2. And mining, let's see, what's the hash rate? 969 exahashes per second. So about 10 exahashes per second more than what we saw yesterday. From May the Schwartz be with you, yesterday's episode of Bitcoin, and I got Oak Grove with, holy shit, 18,291. He says, this is for your episode since 1300. I had trouble downloading quite a few due to the DDoS attack on Curry's network. Yeah, that was happening. Speaking of Schwartz, Spam-A-Lot, Monty Python is pretty funny. More in Patreon. Oh, let's see. Hold on for a sec. Sorry, Dubrovko. I'm unable to bring up my Patreon right now, so I'm going to have to lay off. Jay with 2,100 sats says, thank. Okay, well, thank you too, I guess. Yeah, Nick Dose 206 says, cheers, and cheers right back at you. Noster Gang with 101 sats says, nothing, and that's the weather report. Welcome to part 2 of the news that you can use. Kraken partners with MoneyGram to enable crypto cash outs at 500,000 locations worldwide. Bitcoin Magazine's Micah Zimmerman is writing this one. Kraken will allow customers to convert cryptocurrency into cash at MoneyGram locations across more than 100 countries, addressing a long-standing gap in the digital asset ecosystem. The partnership gives Kraken users access to nearly 500,000 physical locations worldwide where they can exchange crypto holdings for the local currency. The move targets a key friction point in crypto markets. While digital transfers settle with speed, converting assets into cash often involves multiple steps, limited banking access, or delays. The initiative reflects rising demand for reliable cash access, driven in part by Kraken's expanding presence in regions with unstable currencies. Kraken CEO Arjun Sethi told Fortune that demand for reliable cash access has grown alongside the exchange's international user base, especially in regions with unstable currencies. In those markets, users often treat crypto platforms as alternatives to banks. Quote, they want to store in USD or USD equivalent. They want to get yield. They want to do payments. They want to move money back and forth, he said. That usage pattern creates the need for dependable off-ramps into cash. Through the MoneyGram network, Kraken users can bridge digital balances with local currency pickup, paying a variable exchange fee tied to each transaction. The deal also marks a strategic shift for MoneyGram, a legacy payments company that has worked to modernize its operations after losing ground to fintech firms and digital banks. The company is focused on integrating digital assets into its infrastructure as part of a broader effort to reposition its business. MoneyGram spent the recent years building crypto infrastructure, including a non-custodial wallet and deeper integration of stablecoins into its payment flows. The company positions stablecoins as a backbone for cross-border transfers, aiming to reduce cost and settlement delays tied to traditional rails. A private equity acquisition in 2023 gave the firm room to pursue that transformation outside of public markets. For Kraken, the deal adds to a period of expansion as it prepares for a potential public listing. The exchange has broadened its product suite beyond spot crypto trading, acquiring futures, platform NinjaTrader, and derivatives venue Bitnomial. Those moves reflect a strategy to compete across asset classes while strengthening its appeal to both institutional and retail. Despite its institutional focus, Kraken's growth in emerging markets has shaped product priorities. Access to cash remains critical in economies where banking infrastructure lacks reach or trust. The tie-up with MoneyGram signals a convergence between crypto platforms and traditional financial networks where physical locations still play a key role. It also highlights how adoption depends not only on digital innovation, but on practical access to money in everyday form. All right, so that's the end of the article. And I'm sure that there's some people out there going, well, why can't we just have a circular economy? Why don't they just use stable coins on a wallet to wallet basis or Bitcoin on a wallet to wallet basis? You can lead a horse to water, but you can't make them drink. It's one step at a time. We've led the horse to water. That doesn't mean the horse won't drink. It just means that it may not drink exactly when you want it to drink because you're impatient. Eventually, the horse is going to have to drink water. We've led them to the watering hole. Now, patience. It took one step at a time to get the horse to the hole. Now we've just got to, I don't know, maybe pace around the watering hole until the horse decides, you know what, this whole converting digital assets into cash is kind of a pain in the ass. And they start asking their vendors that they're going to eventually take the cash to buy the things from and say, you know, this is kind of a pain in the ass. If you actually took Bitcoin directly with the Lightning Network, and by the way, here's a wallet you can use. You can just use Square if you want because it's already got that shit integrated. I could just pay you directly and I don't have to do all this crap. That will come. Will it come as fast as you want it to come? Probably not. Will it come as fast as I want it to come? Oh, definitely not. I've been wanting this shit forever. Still not here. Just saying. It's going to take time. Don't lose hope. Moving on. Bitcoin Core quietly patched a high-severity memory bug months before public disclosure, but many nodes may still run affected software. Naga Avan Nemoyo is writing this one for the block. Bitcoin Core patched its first ever memory safety bug months before publicly disclosing the vulnerability on Tuesday. The high severity flaw could have allowed miners to remotely crash and potentially execute code on other users' nodes using specially crafted invalid blocks. The vulnerability affected all Bitcoin Core versions from 0.14.0 through 28.x, according to the notice. A miner willing to spend real proof of work resources on specifically crafted invalid blocks could have exploited it to crash victim nodes. Furthermore, because the flaw is a use after free memory error, remote code execution was possible during the resulting abnormal memory state, though Bitcoin Core said block data constraints made that outcome unlikely. However, the attack vector also carried a built-in deterrent. Any miner attempting it would have needed to burn real hash power on invalid blocks with no reward to recover, a guaranteed loss that likely kept the bug dormant in the wild. Corey Fields of MIT's Digital Currency Initiative discovered the vulnerability and privately reported it on November the 2nd, 2024. 4 days later, Bitcoin Core developer Peter Wulla released a covert fix deliberately titled, quote, "Improve Parallel Script Validation Error Debug Logging," end quote, to avoid flagging potential attackers. The covert fix was merged in December of 2024 and later shipped in Bitcoin Core version 29.0 in April of 2025. The last vulnerable release line, version 28.x, reached end of life on April the 19th, 2026, clearing the path for Tuesday's public disclosure. Bitcoin Core developer Nicholas Goj wrote on X that it represents, quote, the first ever memory safety issue across roughly 2 years of the project's public security advisors or advisories, crediting fields for responsible disclosure. Bitcoin's consensus rules were not affected since the bug was confined to node software memory handling and introduced no changes to on-chain behavior. Nevertheless, the disclosure arrived with an uncomfortable caveat. According to one widely cited estimate based on Clark Moody's dashboard, approximately 43% of Bitcoin nodes may still be running pre-version 29 software and remained exposed to the risk. Excuse me. The vulnerability disclosure also adds to a period of acute focus on Bitcoin's infrastructure security. In April, researchers proposed BIP 361 to phase out legacy signature types as a hedge against quantum computing threats, as the block previously reported. A separate paradigm research proposal has since offered an alternative mechanism to protect dormant Satoshi-era coins without forcing address migration. All right, so I want to go back up here. Did I flag it? I did. Okay. I want to read this because it's like some people out there might, read this story, or especially if they just read the headline and go, oh my God. Yeah, okay. Fair enough. Except you got to remember how Bitcoin was built. What incentives are inherent in the system. And this is a really good example of what kind of incentives are inherent in the Bitcoin network system. Any miner attempting to do this would have needed to burn real hash power on building invalid blocks and get no reward. That is a guaranteed loss that likely kept the bug dormant in the wild. Of course, because the incentives are not aligned with the miners. First, you got to spend buku money on the electricity that it takes and tie up a whole bunch of miners to create invalid blocks that you will not, by definition, get a reward from. Not only will you not get the Bitcoin subsidy for finding a block, you won't get any fees because it's an invalid block. All it's going to do is wreak havoc in a network that makes you your money. It's killing the goose that, or at least beating the goose that lays the golden egg. And as long as you're slapping that son of a bitch around the head and shoulders, it's not laying golden eggs for you. And this is one of the most fundamental features of the human state of being: greed. In many cases, for lack of a better term, greed is good. If you remember the movie, kudos to you. It keeps people in some cases, greed actually keeps people in moral and ethical alignment. I know that sounds weird. Too much greed will definitely get you out of the channel of ethics and morality. I guarantee that. But a certain amount of greed, it's sort of like a digitalis. It's a heart medication harvested from the plant foxglove. If you know what I'm talking about, it's a plant. And digitalis is a compound. I think it's an alkaloid compound that comes from the foxglove plant. And in very, very small doses, it's used as medication for heart patients. In high doses, it'll stop your heart and you will die. It is not an if situation. It is a you will die if you weigh this much. If you weigh 180 pounds and you take this many milligrams of digitalis, and it's actual digitalis, your heart will stop. It will stop. It's not a question. It's basically the only question about it is how fast will it take to stop the heart? But it will stop the heart. Same thing here, man. Small doses of greed actually keep people in alignment. They keep the miners going, I'm not going to make anything from that. I want the money. I'm not going to do something that doesn't make me money and actually loses me money, because I could be minting blocks, valid blocks. And I'm not going to waste my time literally paying to build invalid blocks that will never get me any money. I'm actually losing money to do this. Doesn't mean that like a state level actor that has a whole bunch of energy to burn and a whole bunch of miners to buy because they don't give a shit because they just print the money. Sure, those guys, that has nothing to do with, well, it has everything to do with greed. I'm sorry, I messed that up. That has to do with a very high amount of greed, because their greed is for the power that they will lose if they don't attack Bitcoin. And I'm not saying that that will happen. I'm just saying if anybody does it, it's somebody like that. It certainly isn't the Bitcoin miners. So just understand that Bitcoin kind of comes with its own set of checks and balances written directly in the code, which is exactly why the consensus rules are so freaking important, and why if we can get away from it, we never want to touch them. And that's why it causes all these problems when people start talking about we've got to touch this consensus rule, like big blocks. We don't know what attack vectors it's going to throw in there. We don't know if it's going to expand, contract, or be completely neutral on the amount of attack surface area that's available. That's why it's important. If we change one thing, maybe a mild amount of greed doesn't work so well to keep people in line. Just saying. Okay, on to Colombia. Let's go down south. Colombian president says Bitcoin mining could transform country's Caribbean coast, or Caribbean, however you want to pronounce it. Braden Lindria, writing for Cointelegraph, Colombia's president Gustavo Petro said that the nation's Caribbean or Caribbean coast has the potential to become a Bitcoin mining hub, leveraging its surplus renewable energy to attract foreign investment. In a post on X on Tuesday, Petro said the Caribbean cities of Barranquilla, Santa Marta, and Orejoca could host Bitcoin mining facilities and tap into the country's clean energy sources, following a path similar to Venezuela and Paraguay in recent years. Quote, "It's an immense boost to the development of the Caribbean," Petro said, proposing that the YU community, Colombia's largest indigenous community, which mainly resides on the Caribbean coast, could be co-owners of the project. Bitcoin mining analysts such as Hash Labs managing partner Jaron Millerud have said that the industry can have a sizable economic impact on emerging countries looking to convert otherwise unused electricity into cash flow. There's also an opening for countries with low electricity costs to capture a larger share of the Bitcoin network hash rate as United States commercial miners continue expanding into AI and high-performance compute. Petro's remarks were made in response to a post from Luxor Technologies' Alessandro Cisre, who noted that Paraguay's share of global Bitcoin hash rate has risen to 4.3% since tapping into hydroelectric energy at its Itaipu Dam. The small, landlocked South American country is now the fourth largest Bitcoin mining country by hash rate, behind the US, Russia, and China. A World Bank report published in April of 2024 found that Colombia generates as much as 75% of its electricity from renewable energy. That's more than twice the global average, and tapping these renewable sources would mitigate concerns flagged by Petro that Bitcoin mined with fossil fuels contributes to global warming and potential climate collapse. Petro has served as Colombia's president since August of 2022 and has adopted a relatively neutral stance on Bitcoin and the crypto industry. Petro only has another 3 months to lead the Bitcoin mining initiative as his presidential term comes to an end in August. He is not running in Colombia's forthcoming presidential election on May the 31st due to constitutional limits. Data from prediction market Kalshi suggests that left-leaning Senator Ivan Cepeda Castro and Abelardo de Asparilla, a conservative lawyer and free market advocate, are the clear frontrunners to replace Petro. Neither candidate has made significant public comments on Bitcoin or digital assets to date. So chances are real good this is not going to happen unless one of those two guys that wins the presidential election in August, or, well, whenever they hold their elections in Colombia, unless they're a Bitcoiner, this is probably not going to get done anytime very soon. But hey, 75% of the country's electricity is generated by renewable energy. I wish that they had put in one other thing into that statistic. How much energy do they generate in megawatts or gigawatts per year? Because it doesn't say. And if it's like, Hey, we generate 20 megawatts a year. Yeah, okay. Because I don't know what Colombia's population is. I'm sure it's more than 20 megawatts. I'm just, you get my drift, right? I'm just saying we don't know how much energy this actually represents. Only that 75% of whatever it is from renewable energy. Okay, law enforcement has frozen $41 million connected to a $150 million crypto Ponzi collapse. This is Stephen Kate from Cointelegraph. Investment group BG Wealth Sharing, a suspected $150 million crypto Ponzi scheme, has had its domain seized by law enforcement days after allegedly rug pulling users. Zach XBT said on X on Tuesday that illicit actors connected to the groups tried to launder more than $92 million in crypto between April the 27th and Sunday. But he helped lead an initiative that froze more than $41 million working alongside Tether, Binance, OKX, and U.S. law enforcement. He also said the scheme was likely responsible for losses greater than $150 million given it's been operating since 2025 and the thousands of victim exchange withdrawals identified. Quote, while these Chinese investment frauds are obvious to most, they purposely target unsophisticated retail investors via social media. Reading through victim posts, many still seem to be in denial that they were scammed at all, end quote. The FBI reported in April that American victims lost $21 billion to cyber-enabled crime last year. As of Wednesday, the BG Wealth Sharing website displays a notice that it was seized by U.S. law enforcement as part of a joint operation between Operation Level Up and the Scam Center Strike Force. Several regulators have warned that BG Wealth Sharing was an unlicensed entity and advised caution since 2025. In April, the Central Bank of Samoa said it was an investment scam and advised investors to avoid the company. So even Samoa saw it. BG Wealth Sharing, according to authorities, claimed to provide guidance on crypto trading, advertised heavily on social media, and offered daily profit opportunities, referral commissions, rank-based bonuses, and a daily yield of between 1.3 and 2.6%. Always ask where the yield comes from. Before BG Wealth Sharing went offline, purported CEO Stephen Beard told users in a video address on Saturday that its DSJ exchange was on the cusp of an IPO and that a 12% tax on account balances was required as part of the regulatory process. I'm looking at a picture of this Stephen Beard right now. He's been around the crypto scammer circles for a long time, and he's never looked more like a fucking geek than in this particular picture, I swear to God. But on Sunday, users warned on social media that the whole scheme was a rug pull in process. And then on Monday, the Washington State Department of Financial Institutions issued a similar warning. In an update to its earlier post about BG Wealth Sharing, the regulator said it received complaints from investors that warned that it was likely a scam. Quote, a company that requires an investor to deposit additional external funds in order to withdraw their investment is highly likely to be operating an advance fee scam. You think? So they told us, like, we need 12%, whatever it is that you've got. If you want to get your shit out, you know, we need a 12% for your of whatever it is that you're going to withdraw. So yeah, complete rug pull. And we go back. What's the damage here? $150 million, and law enforcement froze $41 million of that. So the warning here is stay away from all the shit that can be frozen. How do you do that? You buy Bitcoin, you hold Bitcoin. But then there's our final story of the day. Attackers drain 1.4 million in wrapped Bitcoin, or WBTC, from DeFi protocol Ikubu in approval-based exploit. And this is who's writing? Naga Avan Namoyo is writing this one for theblock.co. Ikubo protocol lost roughly 1.4 million in wrapped Bitcoin after attackers exploited an access control flaw in its EVM swap router contracts, adding another incident to an already difficult year for DeFi. Ikubu is a concentrated liquidity AMM originally built on StarkNet that expanded to Ethereum and Arbitrum, known for its singleton architecture and modular extension systems. Yeah, well, that didn't fucking help you, did it? The attack targeted a vulnerable payment callback flaw within the EVM extension contracts, according to the blockchain security firm Blockade. The contracts accepted payer, token, and amount parameters from attacker-controlled payload data, but didn't verify that the payer had authorized the transaction. Attackers exploited the flaw to drain funds from wallets that had previously granted token approvals to the affected router contracts. Bad actors notably executed the theft across approximately 85 rapid transactions. The primary victim lost around 17 wrapped Bitcoin, with the stolen funds subsequently converted to wrapped ETH and DAI, according to on-chain data. Ikubu moved quickly to alert users, quote, "There is an active security incident on Ikubu's swap router contract on EVM chains only. Liquidity providers are not affected," end quote. The protocol's core StarkNet deployment and its broader liquidity base were untouched. Who gives a shit? Ikubu's team also urged all users to revoke outstanding approvals immediately via revoke.cash. Crucially, the EVM contracts are immutable by design, meaning a patch redeployment is the only path forward for the affected router. No further losses have been reported at the time of publications. And then they go and tally up all the DeFi exploits that have gone on in this year alone. And ladies and gentlemen, the list is long. Ikubu, who else is there? Drift, Kelp, Volo Protocol, the Wasabi Protocol. Remember, Wasabi Protocol is not Wasabi Wallet. That's different. So five major ones. And there's probably some smaller ones out there that haven't been reported on. 5. We're barely into the second quarter. Jesus. Okay, well, okay. I take that back. We are well into the second quarter of this year, but still 5? Holy shit, that's one a month. That is one a month. And people will still, oh my God, this DeFi protocol looks good. It offers 5.6% yield. I won't ask any questions. Take my money. Don't do that. Buy Bitcoin, hold your Bitcoin, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.